Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. I'm Phil Carroll.
And I'm Kevin Hornsby.
Sunday the 23rd of April. It finally looks like spring is here. We've had some sun this week. I know it's a rare thing in the UK, and actually a solar eclipse in the southern hemisphere. Been in Rome this week, Kev. What a city. You been there?
No, I've never been to Italy, actually. That's a country I've never visited. So,
I'd like to go. Aren't we? We're going to have to change that soon, I think.
To get a company that works in Italy.
Oh, don't forget Prospex Energy in near Venice. We could fly into Venice, and hopefully when the first gas is announced, we could have a bit of time in Venezia.
Yeah, absolutely.
I mean, if you've not been, Rome is one. We described it. We were talking this week with a colleague, and basically it was a case of it's like an open air museum. Like every corner you go around, there's some ruins from the Roman Empire. You've got the Colosseum, the Pantheon, and literally every street corner you go around, you see something, and like a church. I mean, you'd love it. There's churches and there's basilicas, and it is the most beautiful place. It really is. If you've never been, it's got to be in my top 5 cities in the world for sure to visit.
Well, must go and visit one day then. Yeah, no, I've been in poorly Cairo all week, and high of 37 degrees centigrade.
I need some sun now. Need some sun.
Swimming in the pool. And then today we travel to Martha Matrua, so Mediterranean. So dipping my feet in the Mediterranean a few hours ago. And we're off to Siwa Oasis. Have you ever heard of that? Which is basically in the middle of the Egyptian desert. Is fresh water springs that come up. There's about 40,000 people live around all these springs, and they have salt lakes as well. So it's a bit like the Dead Sea. So you can just float in these salt lakes yourself. Like absolutely crystal clear. And then next to those, you get springs of natural fresh water, which you swim in afterwards, which is
brilliant.
Beautiful.
Sounds stunning. Did you see the rare solar eclipse that drew in thousands of stargazers? It was obviously visible in Australia. Ironically, a town called Exmouth, obviously Exmouth of Devon, and that was the place when I went to see. I think it was 1999 was the last one in the UK that the full solar eclipse, total eclipse. And we travelled down early morning and witnessed this solar eclipse. I don't know if you saw it at the time, but it was phenomenal. And if you just have a look on Sky News or whatever website for this one that happened in Australia, and the whole sky goes dark. Temperatures drop by like 5 degrees C as the moon shadow envelops the region around the midday local time on Thursday. So there's all these people arriving in these camper vans, and it was just phenomenal. I think Tim Peake was there, the astronaut, and he witnessed it. But well worth seeking out that footage for this event.
Yeah, sounds good. And the Live Golf event in Australia starts as well.
Yeah,
it's going on over this weekend, so that should be entertaining.
So economists are warning Britain may face another painful interest rate hike, one that we've talked about in the past. So what do you make of this? Because I guess the inflation is remaining stubbornly high at that 10% figure. So they're talking now, expecting levels to reach 5% by the autumn.
Yeah, I think, we're stepping a tightrope, aren't we? But I think it's probably the wisest thing to do to try and get rid of the inflation if we can. So but it's going to be painful for people, obviously, especially from a mortgage perspective. So
that's a big thing.
I don't think it's going to be long lasting, though. That's the thing. I don't think you can have 5% interest rates for like 3 years.
No,
it might be a 6 month, 9 month scenario, and then they'll start to dip again. So we'll see.
Amazing. I mean, I know it's impacted. Egypt have had a very high rise in inflation as well, and you've noticed things like your daily things like your grain, your rice, your butter. But looking at some of these prices here, some of the jumps in prices on the average sort of supermarket shopping bill. Olive oil is the top riser, 49.2% increase on the 12 months. Butters at 22%, whole milk at 40%. I mean, some of these are frightening, aren't they, in a year?
Yeah, they're frightening until you come to Egypt. And then they're not that frightening at all. Because, I mean, butter in Egyptian pounds, I was paying £50 for it. Now I'm paying £98 for it. And that was what, 3 or 4 months ago.
That's
Rice,
100% nearly.
yeah, rice I was paying £12 to £14 a kilogram. Now I'm paying £26 to £28 a kilogram. So everything's doubled, basically.
Yeah, yeah.
Things that are imported have gone up by even more than 100%. So yeah,
Sure.
it's crazy. And I suppose the biggest thing is also meat. Meat has gone up by about 150%. Chicken, I would have paid £70 a kilogram. Now I'm paying 200.
Interesting. So the other thing, and you'll love this one, Rebecca Vardy. Do you remember the trial with Colleen Rooney and everything?
Yes.
This is brilliant. So basically, she didn't. You remember it was. They came up with this pun, this Wagatha Christie, and basically it was the trial of the century, and it was all the magazines, all the the ladies' magazines were absolutely buzzing on this. And basically, what she's done, it's a bit of a kind of like a kicker. Is she's basically Rebecca Vardy has gone. She lost the case, but she's trademarked the phrase Wagatha Christie. Okay, so she's going to cash in on the drama with some Wagatha Christie merchandise. Who knows? She maybe end up using it to pay off the legal fees. Did you make this up?
Well, you couldn't make it up. That's why it's funny, isn't it? It's like, good luck to her if that's what she's done. She shouted her mouth off.
But the mad thing is, she didn't even come up with it, Kev. It was this comedian guy called Dan Jackson who came up with it on this podcast. And she said, "Oh, I'll have a bit of that. I'll take that name," and trademarked it. And then we had our friend Elon Musk on Thursday. This big, massive, I think it's the world's largest rocket ever developed, Starship. Unfortunately, when it made its maiden flight, but it ended in disaster, didn't it? Literally,
that's what happened. 4 minutes in, and it blew up, didn't it? But he was saying it was a success because they got a lot of information and and actually did take off, which was one of the main things that they were trying to achieve. So, yeah, who knows? But they said they'll go again in a few months, and if he gets it right, then he's going to be flying. What was he saying? He's going to fly to Mars and fly somewhere else.
Yeah. So, without further ado, let's get on to our guest this week. Today, we're joined by Paul Griffiths, Executive Chairman of Predator Oil and Gas, the Jersey-based oil and gas company with near-term gas operations focused on Morocco. Welcome, Paul.
Okay, thanks for that, Phil.
No problem. Pleasure's ours. So, before you field some shareholder questions, Paul, do you want to recap just what it is that Predator does and why Morocco?
Predator is on the standard list of the main market, London quoted, and we incorporated the current PLC in 2017. But the history of the company dates way back until the early days of Morocco, 2006, when I first went into Morocco. So Morocco has always been a focus for the company in terms of where we want to spend funds on drilling, for example. And then added to this, we've added Ireland, or we have Ireland historically, and spent over 40 years in the Irish offshore developing assets there. And then the last sort of leg of our three-leg combination of assets is Trinidad. And Trinidad was an area we looked at in 2017, specifically for applying CO2 enhanced oil recovery technology. So the assets are really, if some respects, are legacy management assets that we have developed over many years and now beginning to realize the potential of these assets. So we always saw them as fundamental assets to the company, and therefore we protected our position as a management team in these assets for a long time until we could get them all coordinated in one entity, which is Predator Oil and Gas PLC. Now, we do recognize the energy transition. That's a fundamental plank of our business development strategy. We see that transition as being based on gas. We think it's inescapable that gas will be necessary for many years to come as a substitute when the wind doesn't blow and the sun doesn't shine. And the reality is, as we've all found out in the last 12 months, is that what sets energy prices is gas, not renewable energy, not wind, not solar. Gas sets the price. And the reason why gas sets the price is that when you can't have renewable energy, the only source of energy is gas. So I think that's important to understand from the very beginning that, we focused on gas. And secondly, the idea of CO2 EOR in Trinidad is not about just producing oil. It's about sequestrating CO2, which is currently vented into the atmosphere from Trinidad's ammonia and methanol plants. You may think, oh, well, big deal. Trinidad is not a great contributor to CO2 emissions, but they have the 5th highest CO2 emissions per capita of any country in the world. So that's a good starting point as a pilot project. And we obviously very keen to move along with de-risking CO2 sequestration. And we're one of the few small cap companies that are actually doing that. You know, a lot of people talk about it, but they don't actually do it because they haven't found a commercial model to do it. So I guess that's pretty much a summary of the company. The one thing I would also say as a shareholder, because I'm still a large shareholder in the company, even though I loan shares to the company to fund the assets and the development of the assets, is that we have high liquidity because we, you know, in our shares, which retail market likes, the volumes are normally high because of the activity and the fact that we're continually finding finance to drill wells, etc., but creating opportunities for traders all along the line to trade in, trade out. We understand the retail market. You know, we don't align our company specifically with the retail market. We align our company with building up assets eventually to sell.
Okay, very good. So that's a great overview of the company. We've obviously got Ireland, we've got Trinidad, and we've got Morocco. Now, I think from the shareholders and the questions we've received, Paul, that everybody's more interested in Morocco right now because that's the game changer. I think that could bring monetization to your company and obviously make a dramatic difference over the next period of time. So we have a few questions from investors and also a few of our own. So I'll ask you the first one. You have spoken multiple times about monetization this year. What is your expected sequence of events to achieve that? Assuming a commercial discovery in the MO fan, and have any interested parties already conducted any due diligence?
So firstly, just before I say anything on that, I would just reinforce the fact to all our shareholders is we're not a one-trick pony. Although your interest is in, quite rightly, in Morocco, we also have significant value developing in our offshore island and Trinidad, and I'll explain that later. So yes, Morocco is the focus, but do not underestimate all the other value, potential value in the company, which could crystallize at any time over the next 12 months, and I'll explain that later. So the idea really now is to drill MOU3. So the history of our drilling, first of all, you have to remember that when I first identified Griffiths, it was 2011. And in 2011, I moved into the offshore instead and brought in BP and Cosmos and drilled a $127 million well, which we were carried in, and then exited after that well along with BP and Cosmos. And it was pretty obvious at that time that small caps couldn't really support offshore exploration because of the high costs. So we moved back to focus on Griffiths at that time and kept that Griffiths alive until 2019 when we actually got the license as Predator. And the reason for that is we saw that in 2019, Repsol had made the first Antwerp discovery well. And that at the time had about 100 BCF and wasn't commercial to be developed at that time. We saw that 100 BCF onshore in what we saw as a geological analog to Antwerp way back there in 2011 would be worth a hell of a lot more. So that was a driver for the game plan on Griffiths. When we came into the block in 2019, it hadn't been drilled for this particular area of the block, hadn't been ever drilled, has never been drilled. And the nearest well to it, this particular area that we're drilling, was drilled 51 years ago. So 51 years without a single well on a prime piece of acreage that is an extension of the Raab Basin gas province of the Antwerp gas province in the offshore.
I thought you were being patient from 2011, to be honest, but if you're telling me it goes back to...
No, you
1970.
There are reasons why we didn't get it awarded in 2012 when I was managing director of Fastnet. We will not go into those reasons, but it was nothing that I did that prevented it being awarded in 2012. So we could have had it in 2012, just as we could have had Tendrara in 2014 for Sound Energy, because we had it at that time. But I didn't give it up, but someone else gave it up. That's history. Moving on, we drilled MOU1 basically to establish the geological concept. And prior to that, we'd had the CPR done, which gave us prospective gas resources in the range 329 to 659 BCF. So this was on one of the targets that we thought was prospective in the block. Then we drilled MOU1, as I say, to determine geology and test one small bright spot to confirm that the basin could generate gas. Lo and behold, yes, the bright spot came in. We found gas on the logs. We completed the well or later testing. So what we also established was, as a result of finding this one particular horizon, there were other horizons, but one particular horizon, we ended up developing a 30-kilometre square play in the tertiary, similar to the Antwerp play and identical to some of the plays in the Raab Basin, so the gas play basically in the shallow tertiary. And this covered about 30 square kilometres and was seismically supported in terms of the gas signature that we'd established for MOU1. So that was a good starting point. So it then took over a year to drill MOU2, and you're going to ask, well, why did it take so long? Well, welcome to the real world. The Ukraine-Russian war created a situation whereby the demand for vessels, the demand for cargo ships, the demand for inventory, bearing in mind steel was at a premium because the destruction of major European steel plant in Ukraine and also sanctions against Russian steel plants made it incredibly difficult to source long lead items like casing, to a lesser extent chemical, muds, etc., wellheads. So it took us a long time to find those items. Normally you go into a country and you'd be able to source them within the country because there's a drilling system activity in that country. In Morocco, you can't source it in the country. There is absolutely nothing in the country for certain inventory and items. So everything has to be imported. In our case, it was from about 5 or 7 different countries around the world. Now, you imagine you're sitting there, your casing's just being loaded on a ship, for example, from Dubai, and then suddenly, sorry, we've just offloaded it because we've got a better offer. And then you have to truck it halfway around Europe to get it into Morocco, cross international borders, ferry it across on the ferry, and finally get it through import into Morocco. And Morocco was very, very helpful, extraordinarily helpful in their side of the business. But you can't, compete against these sort of conditions that you're faced with, and they're not going to change. Now, the long lead items have virtually doubled in terms of how long it takes to get anything. Well, we had an advantage. Lonnie, our managing director, had drilled over 20 wells in Morocco and had immense contacts around the world and also family contacts in the business. So we managed to source everything we wanted. It took time. It was a very, very difficult logistical process, but we got there, and eventually we started drilling MOU2. So MOU2 was a pure structural play. It was the highest part of the structure this fan that we had identified. We thought, wow, yeah, look, we could get a 1,000-foot gas column here. Unfortunately, or fortunately, as it turned out, there was a formation on top of our target that had helped create this big structural elevation. But was a very, very difficult formation to drill through. It hadn't been predicted, and it reacted with our new drilling mud, we think, in a way that slowed down our rate of penetration to a level that was not commercially sustainable. We weren't going to spend $100,000 to $150,000 a day drilling 20 meters. So we decided to suspend the well just above the target whilst we figured out how to use a better mud system. And that was a wise decision because we couldn't log below 1,000 meters into this fundamentally different geological formation. So we've gone away and assessed the different solutions, and it probably comes back to using the same mud system as MOU1. Obviously, the logistics, as I said, have changed, and the lead time now for getting that particular mud, because it's a very popular mud, has almost doubled. So we could either sit back, do nothing, and wait for that, or we could move ahead and drill a high-value well, MOU3, which for the first time would target everything in one well. So it wasn't structurally dependent as a structure we're drilling on, but it would target everything. It would target the primary target in MOU1. It would target sand below that. It would target 2 shallow sands. And most importantly, it would target for the first time the sands that were the original reservoir unit in the original CPR up to 659 BCF recoverals. That would be the first time we'll have tested that particular horizon on the block, as well as the main primary target. plus a couple of other additional targets. So why is that location important? Because we took a decision after MOU2 to say that we could spend a lot of time and money drilling a lot of wells in the block to prove up a very large volume of gas. That would be not feasible in the current climate. To continue raising money to prove up volume, bigger volume, just didn't make sense. And the other problem is the more volume you prove up, the less attractive it becomes per BCF of discovered gas. And you could say, well, why is that? Well, your only choice is to sell to the state that volume of gas to power. And you'll get a lower price, and you'll have to go into infrastructure and negotiate going into infrastructure. Alternatively, you could find an area that will prove up, say, for example, 40 BCF of net resources, and you can sell that, develop that as compressed natural gas with no fixed pipelines, sell it to industry up to $16 an MCF and make money that way. So for 40 BCF, we are estimating a price of about $150 to $200 million based on discounted NPV value at 10%. And that is saleable.
So tell us, Paul, just so people understand, because the sort of price of gas has been, very volatile. It's gone up to crazy prices and it's come down to crazy prices. But in Morocco, this is not the case. So can you just tell us what the situation is with gas in Morocco?
It's very simple. Like, if we were to price our gas at European gas prices, none of the Moroccan industry can afford it. They'd all go out of business. If we price it at $16 an MCF, we still make a vast amount of money because of the tax situation in Morocco. There's no taxes on the first 10 years of production and a 5% royalty, and that's it. So the amount of net back is much higher than, say, for European countries. If you price it at a high price, then the biggest off-taker, like the ceramics industry, can't afford it. And more importantly, they can't sell their products to Europe. If you price it at the sort of price we're talking about, which is affordable, then they want to buy the gas and they want to move quickly, and they're in a better competitive position to compete in the European markets and export markets. So it's all about, not throwing your hands up and creating vast volumes of reserves, not throwing your hands up and say you're going to sell gas at 100 million pounds of BCF or whatever as the price has reached at some points, because there's very few people that can afford that. In fact, nobody can afford that long term. So you have to kind of build your business around what is achievable commercially and what is saleable commercially. We will be very happy for an exit of, as I say, up to $200 million plus, say, a 10% royalty in all remaining recoverable gas over, say, 40 BCF, the initial 40 BCF. And we think that is achievable because the demand from certain parties to get into this Moroccan gas market is absolutely strong. It's a very, very attractive gas market because of the tax situation, because of the demand, etc., compared to, say, for example, Europe or other parts of the world.
Is it possible if MO3 comes in, someone's going to swoop in and buy the company?
Well, we're not going to sell the company. We're Trinidad, and we're going to sell.
Okay, yes, but these are...
The reason why you sell the subsidiary is it's a change of control. It's a share transaction. So you're not selling the asset. So there's no capital gains tax in Morocco. So that's one reason that makes it attractive for someone to come in, because they can basically take control of the operating company subject to state consent. But, it's a lot easier to consent to a change in control than a sale of an asset. So that is what really effectively, they'll be buying into not just, some reserves and resources, but also a proven operator, a regulated operator, a gas market that was created initially by Lonnie, our managing director for SDX. We know all the people who are likely to buy gas. We've already been approached by them. And I think you said something earlier, is anybody interested? Well, yes, the answer to that is yes. And you said, well, have you set up a data room? No. Why have we not set up a data room? Because we basically told everybody we don't have time to set up a data room and listen to you, procrastinate for 2-3 months while we get on with the drilling. The choice is very simple. You can have an option to come in at an early stage, exercise in the next, within, say, 30 days of drilling results, or you can get lost and just basically compete with every other party that's interested. And there's some people that are interested in that, believe it or not. And I think we can probably create a deal, but we're not concerned about offering everything too early. What we're very confident about is we're telling everybody, you want in, the price is going to be 200 million based on discovered gas, after this drilling program. It work on that basis, and we don't give it any interest in doing due diligence and legal due diligence, everything out before drilling, because we don't have the time. If you're really interested in this, you can have some kind of option and then pursue it. And that would be interesting for us.
How confident are you MOU3 is going to come through and you're going to be able to produce gas through MOU3?
Pretty confident, but not 100% confident. If I told you I was 100% confident, you'd laugh. Because
I would just think you're insane, to be honest with you, Paul.
Sorry?
I would just think you're insane, okay?
We are extremely confident that this will come in as prognosed. And we can say that probably with a greater degree of certainty now compared to, say, a year ago or 2 years ago, because, you drill wells and you collect more information, and that helps you crystallize the model, that you had from day one. So we're now in a lot better place than we were even before we drilled MOU2. MOU2 was an extraordinarily valuable well, in a perverse sense, I might add, in the fact that the big issue, which I get so tired of people telling me that, oh, you won't find gas in Griffiths. Oh, it's nothing like Raab Basin. Oh, you won't find any sand, right? Because the ethos of our company is subsurface driven. I'm a better geologist than most people, and most people will say, well, you're being arrogant. I don't have to be arrogant because I've proved it. I know what I'm doing, and that creates the opportunity to find opportunities that those people who don't believe in what we're doing have overlooked. And as a small cap company, you have to do that. You can't compete with the BPs. We can't compete with the BPs or the Shells, but we can compete with ourselves. So we know that we have a very, very strong opportunity here. And for us, we're very confident that this is going to work. The scale, to be honest, I would love to think it could be 100 BCF or more, but we're not going to prove that up necessarily in a single well. So we think that proving up 40 or 50 BCF recoverable in a single well from one single horizon is achievable based on the fact we got a very, very robust location here. Say that before every well you drill, but in this instance, we've drilled 2 wells, we've collected and de-risked a lot of information about sand. We had the thicknesses of sand. We had 44 meters of sand caught up above our target MOU2, and that was the first time that anybody had ever seen that volume of sand at this level in the basin. And a lot of people were aghast. They said, well, okay, that proves the sand source. I just said, well, I told you so. And that's not being arrogant. That's being, we knew that this was potentially a very thick sand. Now we have to prove that up again in MOU3, but we feel a lot more confident now about MOU3 than we would have, say, 6 months ago.
So MOU2 has the issue with the mud to get through to the target, if you like. So do you envisage that you will not have that same problem in MOU3?
Yeah, hindsight is a great virtue. Once you've got a data point, it controls something you were questioning on your seismic for a long time. So we're only about 1 kilometre and a bit west of the MOU2 location, but now we know we're clear of this, what I like to call rogue geological unit. So it'll be very much like MOU1, which we drilled very successfully. So we won't have that problem in this particular well.
Okay, so you perceive that there won't be the same problem. Now going back to MOU2, when is it likely that the mud will come for you to be able to carry on and drill that one and prove it up?
In terms of our game plan and timeline, what we want to do is focus on MOU3, drill it and prove up, the volume of gas in that well. If we prove that up, as we suspect we will, the option is to drill another well, potentially before re-entering MOU2, and that then gives us 2 very potentially very prolific wells to add to MOU1, which will never be as prolific because they're thinner sands for sales process. We would not take the opportunity to re-enter MOU2 early if we've proven up the gas in MOU3, because we can drill a well much more quickly than we can re-entering even MOU2 and ordering or getting all the long lead items we need for that. And timing here is critical. We want to be in the position by summer of an exit route and a value. And we don't want to be fussing around on a re-entry to create that value. If we've already created that value through MOU3 and an additional well to MOU3, then we're in a very strong position. And then MOU2 just becomes an upside add-on for the party coming in. So we have to look at it that way. That's not to say we're not going to re-enter MOU2. That's clearly we are going to look at that. Well, that won't help us to exit, you see. And that's
So your plan is drill MOU3, prove gas, get the bidders in, raise a small amount more capital, drill MOU4, prove it up again, and then say, right, who wants to buy it?
Yeah, I think, after MOU3, we'll be in a clear position that we may not even have to wait till the MOU next well results, based on what we have in MOU1 and what we hope to have in obviously in MOU3, then this process will move very quickly, because we're creating, if you like, not a bidding war, which is basically saying that there are several parties who are fundamentally interested in this, and just say, well, here you go. If you're going to do due diligence on the whole block, you're wasting your time. You do due diligence on what MOU3 and MOU1 has discovered, with the upside of MOU2 re-entry, etc., and all the other prospects. But that's what you're basically paying for, to buy into this gas business at very short notice.
And MOU1, just tell us the state of play there, because, have we discovered the gas? Is it just
so
to get it out?
Testing. People get wrapped up about testing. Interesting to note that Anchois, drilled in 2019, has not been tested. That's 13 years without being tested. The Chariot didn't test it. So testing is not the be-all and end-all of everything. Testing is great for retail because it creates a headline figure, but it won't sell the asset. It's volume that sells your asset, not testing. So we always, didn't prioritize testing, but now it suits us to test MOU1 on the basis that we found another way of testing wells. It's called Sandjet, and basically it's used a lot in the States, but it has never been used in Morocco. But the advantage is that you can test multiple horizons very cheaply. And you compare that to test what we want to test in MOU1 is an 8-meter section in the primary zone will cost us about $250,000 minimum to test, 8 meters. For the same price, maybe a tiny bit less or a tiny bit more, we can test maybe 7 or 8 different zones in the MOU1 well. So in zones where we're not absolutely certain what might flow or might not flow, this is a great way of validating those zones one way or the other. So that might take another week or two to get the last part of the equipment we need in place, because it's slightly different equipment compared to conventional perforating, but it's probably 90% the way there. And that would give us a much greater opportunity to get more value out of the MOU1 well, which will be important for what we hope to find in MOU3, for example, at the shallow level. There are I think there's 3 additional sands in the shallow level that we could penetrate, 2 of which had good formation gas shows and look to be gas bearing in MOU1. So that would help validate, what we might do in MOU3. But as I say, I wouldn't get obsessed with testing any well, because a lot of companies don't test wells these days. Because as I say, you can get enough information to determine, what wells may or may not produce that. We have an offset well, for example, in MOU1 in the Raab Basin, which has very, very similar characteristics. And we know from that well, which is tapping a much smaller volume of gas, that they can get commercial gas flow rates for CNG. Well, they did achieve commercial gas flow rates for CNG. So
again, I'm intrigued by all of this, because with all the information that you're gathering downhole in both MOU1 and MOU2, what with the ability of now computer modeling and stuff, what are you able to do in terms of being able to actually predict to a pretty straight, accurate way of the geology of all of this basin now that you have this information?
This is the difference between experience and computer modeling, right? Yes, you can create beautiful AI-driven computer models, but, the AI needs a training set to work on. And without the training set, it's going to come up with spurious results. And it's a bit like, software Kingdom software that interprets 3D seismic. Wonderful, where you got a beautiful grid of seismic. But in the gaps, it just uses AI to create fill the holes in the gaps. It doesn't use geology, right? It doesn't understand geology. So yes, you're right to say you could do that, but I'm not going to do that, as you might have predicted by now, because it won't tell me. What I base our estimates on is you have real data from an offset well. You have all the parameters for that well. You have maybe 60% of the parameters for your well or our well, and you can say, well, the other 40% should be like this, right? Similar to this well. So by comparing it with proven well, if you like, that's your training set, you can make assumptions, but you cannot and you should not carry those assumptions throughout the whole block. Because geology is a science where everything changes when you cross a fault. Everything changes when you get into a different formation. And to model that without a lot of data, well data, is virtually impossible and will give you spurious, meaningless results, which is why a lot of people overlook certain things like Griffiths, because it doesn't have a wonderful database, but it has wonderful geology. And that's, the key for finding gas.
So basically, investors are investing partially in your experience and knowledge and brain of this geology.
That's what you invest in. We're not saying that, we're unique, but what we are saying is perhaps we're one of the more unique companies in the oil and gas sector in the small cap market, because we're driven by subsurface and drilling. Now, I have 40 years experience in subsurface in all aspects of the subsurface. I was a research geophysicist for Gulf in the early days, and then became a geologist, and then went back to geophysics. So I understand every aspect of subsurface. Lonnie, our managing director, understands every aspect of drilling, and he has drilled over 20 wells in Morocco. So when you put those two resources together and combine it with my understanding of the public markets and all the corporate requirements of the public market, we are unique. And one of the parties interested in coming into Morocco couldn't get their head around the fact that the company was run and everything was done by two individuals, from corporate through drilling through subsurface evaluation. They just could not. They said, how the hell do you do all that? And I said, well, when you buy Morocco, we'll retire and become advisors, and then we'll be like the Alan Sugars of the oil and gas sector. Except that our problem will be we'll be firing more people than even he does. So it's not, we're not trying to be arrogant here. It's confidence. It's about confidence. And it's not misplaced confidence. And that's what you buy into. We are not going to be 100% successful every day of the week. And MOU2 in some ways proved that, because, there was something unexpected that even we hadn't allowed for. But we've learned from that. And that's the key. You learn, and you learn quickly, and you go again, and you get the game plan back on track, and you get to the winning post as soon as you possibly can.
Okay, so this next question is quite a technical one, I think, but I'm sure you're going to be able to answer it. Does the MOU prospect extend to the northwest? And if so, how does the structure close? Is it an anticline closure, or a fault closure, or a stratigraphic pinch-out?
All the wells we have drilled have been on structural closures. So on the MOU fan, all the wells we have drilled and will drill, including MOU3. So it's kind of like an insurance. If, structure controls the trap where the gas is held, then you want to be on structure. Now, it is possible that the whole fan is irrelevant in terms of structure. It's a stratigraphic trap. So it just closes to the northwest. It just closes in every direction because the sand pinches out and is sealed by shale. So it'd be like the Jubilee Field, for example, in Ghana, is a stratigraphic trap. There are stratigraphic traps in the North Sea. So it could be like that, but I'm not banking the company on it being like that. I'm banking it on a combination of having a structure and having the fan. And that creates the sort of minimum reserves that I need for CNG development.
So what we're talking about, just so people can sort of maybe try and visualize it, is you've got a big bag full of gas, and it declines, and basically sand and shale comes in and closes down on all sides.
Exactly, like a big balloon full of gas, and it's completely enclosed by something that seals it. So nothing to do with structure.
Yeah.
We've still got to get the gas in there. So you've got to have a fault somewhere on the side of the thing that actually sources the thing. So that's one option. The second option is it's like tilted fault blocks, anticlinal closures, etc. So we have both options. In fact, MOU1 was a downfolded closure against a fault. Oh, sorry. A closure against a fault. I'm not using downfolded anymore because, again, I've learned something over the last 2 years. So it's fault closed. So we know the fault seals in that instance, right? So the gas can't escape. So going back to your question, there's no specific answer. It can be all three things, but the safest bet is to combine structure and stratigraphy, or reservoir stratigraphy, reservoir distribution, if you like.
Okay, so let's move. Okay, because I think we've done Morocco. Okay, so let's move to Trinidad. Let's have a look at the questions that people have put in. What is the upside of Trinidad assets? How valuable could they be? What is the significance of the Corey Moruga asset? And why are you particularly excited about it? You probably can't answer the first few, but you can.
It's all linked, really. It goes back to history again. We first identified Corey Moruga in 2016 or 17 as a purchasable asset. It had issues in terms of the incumbent operator at the time was in debt to the ministry, etc. And unfortunately, the successors had probably inherited that. So there's kind of issues there with the license. But we identified the fact that, trying to be polite, we don't think that the incumbent operator at that time, a few years ago, had the subsurface skills to best exploit the block, and in fact didn't actually move it on from 2012 when Parek's the original operator had a very clear vision of what was there. So we're kind of going back to 2012 where we know what was there, adding our bit of extra subsurface value from our knowledge of adjacent fields that we've worked on, and adding CO2 EOR as an upside. So when we started CO2 EOR in Innis Trinity in 2019, nobody was interested. That bottom line, nobody was interested. When we prematurely left CO2 EOR in Trinidad, not for our own fault, in 2021, what happened then? Well, virtually every IPSC, International Production Sharing Contract, and new license talks about CO2 EOR being applied, thanks to us. We're the only ones who can apply it at present. So we created, a situation where we levered ourselves into a position where CO2 EOR is a massive negotiating tool with the government and the ministry. That created a position for us to take out Corey Moruga, subject to ministry approval from Challenger on a mutually agreed amicable agreement. We see we can add value through subsurface and through CO2 EOR. And if you're talking about what the value could be, I think the value could be is that it's quite a unique asset in Trinidad, because our shareholders could actually get money from a producing field, which is, as you know, very difficult in Trinidad. And more importantly, we see the value probably similar to exit value for Morocco. If all goes well with an infill well, the development well, and over the next 12 months, 18 months, and the CO2 EOR. So in a sort of range of 12 to 18 months, we could see that value increase substantially through, again, the successful CO2 EOR and workovers and the drilling of a new well. And the important thing is, it's not an ancient field like most of the fields in Trinidad. It's never been developed. So it's a virgin field. And I don't know another virgin field in Trinidad like this. It's covered by 3D seismic. Someone misinterpreted the log interpretation of the old well versus new well. And effectively, you have 8 reservoirs that have likely ought to be ore bearing, similar to Moruga West field, which adjoins and extends into the block. So again, it's the application of experience and vision and expertise and drilling expertise, which we have for this is a similar section to Morocco, but without the rogue geological formation. So we see that's where we can add value. Productively, it won't be as high as Morocco, but it is oil and CO2 sequestration. So there has an extra value in that respect.
So that's pretty exciting then in terms of valuation. Anyway, by what you're saying, if you're putting it on par with Morocco, then everybody's been missing a trick then, because from what I'm reading,
everybody's been missing a trick because everybody's just being worn out. by, progress in Trinidad over the years, which it's no reflection on any particular operator. It's just very difficult country to operate in when you're going back into older fields or difficult areas probably, I wouldn't have gone into. But it's just a unique opportunity, and one that has been missed. And I can say that now because we've signed the legal agreements with Challenger. But I do think a lot of people have missed a trick here, and that's great for our shareholders. I'm not saying it's going to be gangbusters value, but I'm saying it's going to be on a par potentially with Morocco if all goes to plan. And that's a big if, because it's very early stages, us moving the asset along. But we are excited. That's the next Morocco for us.
Okay, very good. Okay, let's move on to the beautiful island of Ireland. This for me anyway is more of a political issue than a reality of any drills or anything else. So tell us how this wonderful island of Ireland democratically has decided to not give itself the opportunity of LNG gas.
Again, you have to look at history. There's a common theme in it, as you might guess by now, is that I've been involved in Ireland a long time. I did the original exploration work on Corrib before it was Statoil and Shell and Enterprise came in. Always saw Corrib South as an analogue of Corrib. It's a relatively similar size structure, similar geology, and only 18 kilometers from the Corrib field. And when Shell had it, or they were operating at Corrib at the time, they dropped it. They had it, kept it as a reserved area to add to Corrib for a long period of time, but then they decided it was too small and they dropped it. Yeah, well, gas prices have increased about 5 times since then, so size doesn't matter anymore. It's the value of the gas in the ground. CPR gave us up to just over 900 BCF recoverable in a gross sense. Now, there is a partner, Theseus Limited, 50%. That partnership was created before our IPO, way back in 2014-15. I own 50% of Theseus, which is all declared, and my partner, Vivian Caston, owns the other 50%. And that is obviously reversible at any time into Predator to gross the asset up to 100%. We have then effectively, in my view, 100% of the resources. That's a huge resource. It's about the size of Corrib in the upside case. It may never hit the upside, but it has been vetted by 2 Corrib owners over the last 3 or 4 years, and nobody says no. But we have a Green Minister who has to follow an agenda set by his party, and quite rightly so, to focus on climate change. But we have spent the last 9 months, quite a brutal PR campaign, to basically put gas at the forefront of the energy transition in Ireland. Now, I won't say we're winning, because you never win in Ireland. There has to be a compromise. But only last week, the minister gave an interview with the Sunday Business Post in which he talked about a 180-degree U-turn on the LNG in Ireland. That's the beginning of the finger coming out of the dike, in my view, that the realism that this has to happen, irrespective of the small-scale, political ground roots opposition to LNG, which will always be there. This is bigger than that. This is about the survival of security of supply. This is about the energy crisis. This is about spiraling energy costs. Nothing to do with the oil and gas industry. Spiraling energy costs are only occurring because the energy transition wasn't thought through at an earlier stage to allow indigenous gas and LNG to be developed to cushion price rises. If that had happened, there would never have been the reliance on Russian gas. So don't tell me that this is the oil and gas industry's problem. This is government's problem, and the buck stops at them. And they're all benefiting from the windfall taxes. And the people making the biggest profits are the wind farms. So how does that all work? So they're going to take money away from the wind farms, effectively reduce investment in wind energy, while still relying on gas, when the wind doesn't blow and the sun doesn't shine, which sets the energy price. Now wake up and realize that you created a problem. You tried to solve it by putting LNG throughout Europe in 2022, but Ireland didn't. Ireland just sat there. They had the opportunity to be the first mover in Europe. We gave them the first opportunity with the Magmail project in 2020. They turned themselves round 180 degrees to be the last mover in Europe, and they will move eventually. They have no choice. So in terms of value, right, it's coming of age. So Ram Head, for example, which I discovered in 1984, 85, that's where we drilled the well. And since that time, I made sure that, it was protected, so no other license holder ever got into the asset. It's always been myself or one of my companies, and now it's in Predator. So that's still there. The value of that is that it's the largest undeveloped gas field offshore Ireland. It's potentially on the CPR up to over 2 TCF recoverable gas. I don't believe it will ever reach those heights, but it shows you the scale of the opportunity. It's a huge structure, a Jurassic structure, and there is an existing gas field on it that's never been developed. So the other thing about it is that those successor authorizations, the applications for them, the government may sit on them year after year, but they can't take them away. So we still have legal title to go through assessor authorization process. They have never once come back and said that you don't qualify. We have given them every single piece of information at every appropriate time. So now they have no more information to ask for. So our view is you've got to put up or shut up very shortly. If you're going to say, just like Barry Rowe's situation with Barry Rowe Offshore, if you're going to say you're not going to get the licenses, well, then you're lending yourself wide open to compensation claims, not because of the fact that you're not giving you the licenses, but because they've spent 5 years prevaricating, effectively interfering with your business. If they had said no 5 years ago to Barry Rowe, or no 3 years ago, fine. But they've led everybody along for several years and damaged the interest, particularly of the Barry Rowe shareholders, by not making that decision. So that's where they're very, very open and very, very liable to compensation claims, as we've seen with Rockhopper, just not that long ago. But nobody wants to go down that route. The route is that gas can contribute to security of supply and ameliorating energy price rises in Ireland. They're beginning to realise that. Minister even talked about a possible explosion on the interconnector. We told him 3 years ago that that was a possibility, an earthquake, for example. So finally, it's beginning to dawn. Unfortunately, the rest of Europe's moved on, and Ireland is at the back of the queue for everything.
Yeah, I mean, Ireland is at the back of the queue. It's the last on the pipeline, last to decide what they're going to do. So, and they have everything there to give them security, but they're choosing from a political standpoint to stand on this green agenda that actually really, I mean, a lot of the countries in the world have actually started moving gas into that green category.
Exactly, and that eventually will happen in Ireland. And that's why, when it comes to value, we look at Corrib South as being of interest to the Corrib owners, naturally, because, that's potentially, if discovered gas, it's into the infrastructure. And in Ram Head, we have gas storage opportunities. We can, under the 2007 licensing terms offshore Ireland, we can make a case. We're using the Kinsale pipeline. We have a legal right to approach the minister under those terms and say we want to use the infrastructure. So that nobody else has that right apart from potentially Barry Rowe, but you can't put oil through, well, you can, but it'd be very difficult to put oil through the Kinsale pipeline. So they may say they have some gas, and they undoubtedly do, but it's predominantly oil. So it gives us an advantage in that there's absolutely nobody else that could say that they have some form of legal right to utilize that infrastructure. Why is that important? Because our Mag-Mel project, FSRU LNG, would utilize that infrastructure for putting gas into the infrastructure, storing gas in Ram Head as well. So it puts us in a unique position. Nobody else can compete with us offshore Ireland on an offshore FSRU LNG solution. And that's what we've been plugging away and banging away for the last 9 months at government level, at all kinds of level, at every kind of agency, institution in Ireland. Initially, I won't say we were showing 2 fingers, but we were, in my view, disrespected. Well, now it's all coming home to roost. Now they know we were right. We gave them the opportunity. Now it's almost embarrassing for them, because people will turn around and say, well, why did you wait 9 months? Why did you wait 2 years? What was the reason? Give us the reasons why you didn't engage. So we're very confident that ultimately there is value in Ireland, and a significant value, but we are never going to develop our assets in Ireland. We are going to move them on to someone who does want to develop a big position in Ireland and has the capacity to do it. We do not have the capacity as a small company to develop these assets in Ireland. It's obvious as analysts continue to tell us. Yeah, thanks, guys. We don't need to be reminded. We know that. Believe it or not.
Yeah. So to recap overall, we've got Morocco, and this is the imminent driver of value, and this is going to come. We've got Trinidad and Tobago, which is basically over the next 12 to 18 months. And we've got Ireland, where there could be progress at any time, but it also could drag on another year, 2 years, who knows? And that's basically what you're doing. And you have three, in inverted commas, unique assets that really, as a market cap right now of 33 million, how do you feel about that total valuation in terms of your potential?
Look, the way it is for oil and gas companies in our space is that your market cap is always going to not reflect what the potential value of the company is. It's the current value, of the opportunity in the assets. It only takes one well or one agreement to change that value, and it will be changed overnight. So we all know that. So I think we're in a good space. We don't have too big a market cap. We don't have too small a market cap, but we have running room. I think our share price is, last time I looked, was over 200% higher than the IPO price, right? So we've raised about 20 million in 5 years, and we're sitting here with a 200% increase on the IPO share price and 10-fold increase, 12-fold increase in market cap. You showed me too many other small cap AIM companies and standard list companies can demonstrate that. And the reason is that we have unbelievably strong management. We don't take prisoners. The clue is in the name, predator. We're not Mickey Mouse, we're predator. We hunt for the right deal, and we negotiate hard because we simply don't care to do deals with people who think that, they're bigger or better than us. Yes, they may be, but they cannot compete with our skills and our understanding of our assets. And that's what we're selling, to not just the market, but our peer companies.
Very good. Well, Paul Griffiths, thank you very much for your time, and we wish you luck. The MOU3 is going to be coming about in the next few weeks and months, and we will see what the results are.
Yep. Don't forget the other assets, though.
No, absolutely. But this is the imminent one, isn't it?
Yeah, this is right.
Let's see where we go. Okay. Thank you.
Yeah, it sounds very exciting out there in Morocco, doesn't it? What are your thoughts on it?
Morocco sounds very exciting. I mean, if you believe and trust in Paul's wisdom and knowledge and experience, then it's a no-brainer. You're going to be a millionaire basically within the next few weeks. And then, the Trinidad and Tobago thing looks just as exciting actually, but maybe a bit further down the line. And then Ireland could eclipse them all.
Yeah.
So, if you want to believe in that rhetoric, then basically Predator is going to be £1 billion company within the next 3 years. And I think it's possible. I think he's very, very confident on Morocco. I was sort of surprised how confident he was. There was no ifs or buts. He's pretty sure he's going to drill down there and boom, he's going to find what he thinks he's going to find in those sands. So yeah, good luck. You put your money down and you take your chance, don't you? I mean, you got to believe him or not, I think, is the option.
All right, moving on to this week, the week that was, movers of the week. Amigo actually did the best, 150%. I mean, I cannot believe that this stock, proof that there are lots of gamblers out there is how I would describe it. Amigo Holdings, a provider of mid-cost credit in the UK, is currently in an orderly solvent wind down, has noted the recent movement in the company's share price and confirms that it knows of absolutely no reason for this increase. And I think we are the same boat. We know of no reason. Why would anybody want to buy a stock or trade why would anybody want to buy or trade a stock when the board continues to implement the fallback solution, basically a wind down of the business?
Us.
Moving swiftly on. Ondo, up over 100% at one point on Thursday. What did you make of that? And we talked.
Yeah, we interviewed them, didn't I? 6 weeks ago, and maybe longer, was it? Maybe 8 weeks ago. Not really surprised because the share price had fallen back quite significantly. It's tightly held, and it's cracking news, isn't it? I mean, they're gonna they're basically broken the back of America now in terms of going in.
Yeah.
And, the numbers he talked about on that podcast, when you analyze what's potentially possible for America as well as the UK, then it's pretty serious number of households this could go into.
Yeah, well, the company that they're, let's say, partnering with is WNS Holdings, who are a world-leading business process management company. They're quoted on the New York Stock Exchange. They have got a market cap of $4 billion. So, yeah, and I think the wording in the RNS was very encouraging. Obviously, Craig said this is a game changer proposition within the home insurance industry, which can considerably accelerate our business scaling. With the WNS loss reduction guarantee, insurers are incentivized to move straight to large-scale rollouts to deliver a guaranteed improvement on their loss ratio. We look forward in future to being able to announce the fruits of the partnership. I mean, great words.
Yeah, and a long way to go, I think, as well. I mean, though I had a great end to the week, I think ultimately, I think going forward as that comes to fruition, then it can only be a good thing.
Yeah, prospects up 50%. We alluded to them earlier on. Italy, they had a good run. I mean, they dropped back a lot though. To be fair, didn't they? It was almost a ridiculous sell-off.
Yeah, I mean, it dropped back way into the sevens, didn't it, from 20p, which was just mental. I know I only really touched 20p, so let's maybe say 18 or 19p. But even so, that was hell of a sell-off for just a short delay, basically. And there's got to be news very shortly on that, I think. And when there is, we'll bring it to you, I think, because we'll be interviewing. So
Genflow up 43% on the week, around about the 4p area. They obviously hit highs around the 5.5 pence mark. Company has obviously submitted an application for trading of the company shares on the OTC QB venture market in the US. Good news.
Yeah, well, I think if any of you've got some memory, 3 weeks ago, I said bargain of the week at 1.6p, I think it was.
Yeah.
So, it's gone from 1.6p and hit a high of, you could have sold for over 5 this week. That was a pretty nice return, And Extract Resources has also carried on. That was bargain of the week 2 weeks ago, I think. It's gone happily into the 2s now from very low 1s, I think. So, yeah, there's been, I see, and yes, I am Mr. Positive, there are green shoots.
You said that 2 weeks ago.
Spring is sprunging.
No, I agree. It is definitely turning.
Spring
definitely
has sprung.
There's more liquidity coming into the market. There's definitely more liquidity. There's more stocks like Ondo doing these daily moves where value will out in these stocks, and that we're definitely seeing some movement, and it is encouraging. Yeah. But I don't want to jinx it and say yes, the market has turned.
No, I don't. Doesn't mean a market never goes up in a straight line. I mean, I said that to somebody this week when we were looking at Genflow. It's gone from 1.6p to 5.5p. Is it not going to have a pullback? Sure it is, and it did have a pullback, and then probably will go again because it's very tightly held, and so on and so forth. So all of these stocks, you're seeing some decent stocks have decent run, and that is important. Like last week, I said bargain of the week was Galileo. I think it's up about 12-15%. Now you can correct me if I'm wrong there. I'm not sure how it finished, but that's got miles to go. It really has. I mean, the opportunities there, the cash coming in.
It was interesting because you mentioned that because obviously Zambia, we had some great news, didn't we, from Arc Minerals this week?
That's right.
Zambia deal with Anglo American. So it's great to see Zambia and some companies actually working in partnerships and with these big majors. Is that the start of it? Let's hope so.
And there was good news as well this week for East Star Resources as well. They did a review of where they've done it, where they've been in the last sort of 12 months. And, it seems like they've got cash to keep them going for the rest of this year at the very least. That's the same. You've got majors on their doorstep. You've got Glencore right next to them in terms of these copper resources that they now have effectively a resource there on the ground. So Teck Minerals is going to hopefully get the license confirmed, and there's lots to happen then. And then you've got the license on the lead acid battery to come as well. and lots of things that they couldn't announce until they got these batteries, I think, still to come. So yeah, I'm pretty hopeful about that one continuing to rock and roll as well.
We had a good announcement on Thursday from Greatland Gold on the Ruddle asset, the Ramsay's target, and basically, I don't know if you saw the drill results, but there were some exceptions.
I did. I saw the gold grade.
Great result. They were scorching results.
Yeah, no, there was one 390 grams or something per ton, wasn't it? Which is incredible, really.
Bonanza grade, as you say.
Yeah,
but that was very encouraging. 18.25 meters at 22 grams per ton from 924 meters to end of the hole at 942, including 1 meter at 393 grams per ton from 926 meters. And copper, silver, bismuth, and arsenic assays were recorded within the broad altered intersection. So very encouraging results. And Sean was very obviously upbeat about that. Great to see.
Yeah, wowza. I mean, it really was. It was incredible. A lot happening in Australia this week.
Yeah. The
just need extracts to do some news in Australia now, and we'll be laughing.
Yeah, the other one was Alchemy Capital. There was a good update RNS on Thursday, basically providing an update on the recent activities and milestones. Their world-class Wilton lithium hydroxide refinery, one of Europe's largest and most advanced, has now received environment and planning permission, shovel-ready, final feed engineering studies are now underway. And then the Port Hedland lithium sulfate refinery is advancing rapidly with land secured at the Budari Strategic Industrial Area with the environmental and planning approvals process and feasibility and engineering studies underway. The secured lithium offtake, obviously, as mentioned, with Recharge Industries, the new owner of British Volt. We've alluded to them in the past to supply tolled low-carbon lithium hydroxide. So, obviously, project financing discussions is the main area. And obviously, when we met Paul, that was one of the things. They're advancing well with multiple potential providers of debt, strategic equity, and green bond finance. What do you make of that one?
Yeah, I think I feel like I missed an opportunity this week because that one dropped to about 140 or something. I've always sort of been watching it, but didn't watch it too closely this week because I've been too busy doing other things. But bounced back to £2 or thereabouts, I think. But I'm going on my theme of bargain of the week, and so far we've had Genflow, then Extract, and then Galileo. And I still think Galileo is an absolute bargain. It needs to go, but I'm going to choose Alchemy Capital as my bargain of the week because I really think it's a very good value now. There's so many things coming to fruition, and within the next period of time, however long that is, it could skyrocket. Literally, if it gets the funding, it's going to go bananas. Yeah. Very, very tightly held. I think there's only about 7 million shares in circulation in total, and there ain't many of them about. And if it happens, it's got the potential to produce hundreds of millions of revenue per year, if and when it happens. So yeah, I'm going to pick that one for this week, and let's see how it gets on.
I'm not going to mention Chill because I know you'll mention Chill.
Yeah, no, I was about to mention Chill because I think there's a lot of news on the horizon, I think, with these vapes and different things happening. So I think we'll probably due some of that news in the next week or two. But there's been some strength in that share price, and there's still a few shorters, I think, to jump off as well. So, yeah, I think that's one to watch. Could do very well, in my view, over the next year, just because revenue should really start to tell. More people added to the chill.com website, and also the vapes, never mind all the other products. But I really think the vapes are going to be the star as time goes by.
All right, well, on that note, I'll say enjoy your break away, and we'll catch up next week.
Indeed, thank you, and enjoy your Sunday roast.
Thanks for listening.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.